Okay, can we start now? Can you hear me? Hello?
Yes, we can hear you, and you can start now.
Okay, good afternoon, everybody. Welcome to the second session on FinTech for the JIIPC Mentorship and Internship Program for the second quarter of 2023. Today's topic is going to be FinTech business models, profit models, and FinTech sector spread. But before, let's wait for our mentors to join us. Let me see. Okay, I can see two of our mentors are present. But while we wait for the others to join, I'm going to read out a few announcements. Okay, the first one is going to be about the program. The JIIPC Mentorship and Internship Program for FinTech is a quarterly mentorship program for students and young professionals across Africa. Sorry, okay. Thank you, Hussein. Mentees are afforded the opportunity to access valuable advice, training, network, mentorship, internship, discussion forums, industry updates, and resource materials from experienced mentors. This program seeks to encourage continuous training, development, and evolution in Nigeria, Africa, and around the world. Hashtag JIIPCCMIP. You can watch our videos by searching for JIIPC, that's JIIPCC in capital letters, on YouTube and Facebook. The objectives of the program include: 1, to provide easy access, guidance, training, and resource materials for students and young professionals in Africa. 2, to facilitate dialogue and network among experienced and less experienced practitioners and stakeholders. 3, to transform mentees into mentors and leaders for the next generation. And 4, to facilitate further mentorship, internships, scholarships, and job placements for the mentees. Then I would also like to use this opportunity to announce that you can have a 30 minutes one-on-one mentorship with your favorite JIIPC mentor. That's where if you have a mentor that maybe you enjoy their sessions so much or you look up to them, you can contact us to hook you up with them so you can have a one-on-one mentorship session. You can get hacks, secrets, life lessons, and directions from your favorite mentors. Okay. So I'll be announcing the presence of our mentors. We have Ms. Mariam is with us, and I think Mr. Ibrahim too is around. So let me read out the mentor's profile. Can you hear me? Sorry.
Yes, we can hear you.
Okay. Okay, our first mentor for today is Mariam Hassan. Mariam Hassan is currently leading payment strategy and partnerships at Leatherback Limited. She handles all strategic partnerships, engagements, and oversees implementation of the payments platform. She has over 8 years experience in payments and collections, fintech business and partnerships, digital platforms and virtual channels, product development and strategy and project management. Mariam began her career in banking and until recently was the lead fintech business and digital bank at Providus Bank, where she was responsible for building and managing the virtual channels and fintech business. Thank you so much. Thanks for joining us, Ms. Mariam. You're welcome. Our next mentor is Ibrahim KG. Ibrahim KG worked to bring in top-tier agile process culture, commercial growth, sub-Saharan Africa markets, expansion and payments collection, distribution across emerging markets, sub-Saharan Africa and Latin America, agile workflow / engineering team manager, consumer solutions and data analytics, managing engineer and design teams, product ops and product scaling deliverable, daily product engineering and architecture led by data, pivoting and iterations led by users' data and intimacy, product vision and purpose fit metrics strategy, DevOps and multiple Scrum team, product features and ejections. Worked as an individual contributor, IC growth, marketing hacks, Scrum rituals, agile product ops, and businesses cutting-edge development strategies to accelerate growth by expanding offerings. He is talented in coaching diverse teams in product growth and analytics, ensuring the ongoing improvement of customer service and performance. He has worked with a leading fintech, DeFi, McKinsey & Co., Procter & Gamble, Cash App, Donut App, MaxDrive Africa, to name a few. He has also worked on a global remittance / DeFi app platforms as DeFi, smart contracts / blockchain high-yielding APY offerings as Anchor Protocol Idle Finance. Also worked with the Born-Free app team as an agile product owner / geek. On-ramp and off-ramp models for the emerging markets with CashLink. Early part of virtualfx.com team as product owner and Astra Cash mobile app, MFB. Built a lending new bank / digital app. Built profits to $840 to $1 billion across 5 verticals. Catapult revenue growth by 500%, accelerated his team's growth and portfolio program executions, fast-tracked into leadership programs, worked on Web3, blockchain / smart contracts on-ramp and off-ramp platforms such as CashLink, Donut App, and Superbase. He led a combined over 16 million user-based technology platforms / apps to date. He had the unique opportunity of doing business / working with teams in 10 countries, SSA and Latin America, either deploying solutions in markets or commercializing technology assets in those markets, or delivering on market development programs, actively adapting business models to suit each market and developing the right go-to-market strategy in each market. Thank you very much for joining us, Mr. Ibrahim. Our third mentor for today is Mr. George Onyuchi. George currently heads fintech engagement for First Bank and its subsidiaries across Africa and its digital innovation lab, setting up and driving the bank's fintech strategy. George is a link that connects technology, business, and ecosystem and partnerships. He is at the intersection of products, partnerships, and ecosystem building. He has led the tech solutions product development for the SME banking business of a leading commercial bank and have taken numerous financial and non-financial products from idea to market and growth. He has led digital transformation in the client engagement processes for leading commercial banks, including one of the Nigerian banking industry's first end-to-end account opening for corporate accounts and SME digital lending. His team have won numerous awards for powering growth of SMEs. He also provides advisory for CRIP Africa towards developing blockchain infrastructure and building the operating system for African businesses on the blockchain, and hosts knowledge sessions on blockchain application to various industries within the African context. Thank you very much for joining us, Mr. George. Okay. I'm sorry, let me. Okay, I can see that we have Ms. Mariam and Mr. Ibrahim with us. Ms. Mariam, I'd like to welcome you and give you some space to give us an overview on the topic. Thank you so much. Please welcome Ms. Mariam in the chat box.
Hi, Amina.
Hello, Ma. Thank you for joining us.
Okay, so I guess you've changed things a bit because what I was expecting was for the mentees to go first before we come. So what would you like me to do or say?
Yes, maybe
Hi,
anything.
good morning. Good afternoon, everyone. Yeah?
Good afternoon. Anything you have to say about the topic, or if you'd prefer mentees to go first, I don't know, or any other person.
Okay, because that's usually the norm. So what are we talking about? Fintech business models, profit models, and fintech spread. So for fintech business models, there are several, right? And it's not country specific, really. You know, you have the payment system platforms, you have InsurTech, you have WealthTech, and you have a range of them. But at the end of the day, the core of most of the business models that the fintech, come up with is to ensure that it's basically revenue driven, right? And that's what it's at the core of the business model. So, they basically you have to check your customer segment, which is the very essence of your business model. And that's where it starts from. You have to have a targeted customer segment where the base of your business model is built from. After you have your targeted customer segment, then you have to work on your value propositions. Obviously, the value propositions is also the core of the service that you intend to sell to the customer segment that you've identified. So once you've been able to do that, then you move to, identify your key partners, identify the key activities, identifying the key resources as well that helps to drive your value proposition to the market of the customer segment that you've targeted. But in coming up with your business model, you also have to check for how desirable is the product that you're looking to bring to the market to these customers. How viable is it? And is it also visible? You check your cost structure. Sorry, I do not have a presentation, so I'm just talking off the top of my head. You check the cost structure as well, right? That's what's the cost to bring this product to market, and check it also against the revenue structure that you've identified. And once you're able to do that, you ensure that your cost structure is not higher than your revenue structure. And when you're able to check all four, checking the cost structure against the revenue, checking the value propositions as well, and ensuring that you validate the market. So basically, when you come up with your business model, you're checking for hypothesis, right? You're hypothesizing that this value proposition that I'm bringing to this customer segment, would it work? More often than not, some fintechs or companies do not check to validate that this hypothesis will work in the market. And that's why when you bring this product to market, sometimes it fails because you haven't validated, you haven't done customer validation to ensure that this product you're bringing to market would work. So you have to also check for the adaptability of this business model across any product or any business model that a fintech is looking to go. Whether you're going into digital payments or you're going into insurtech, you have to be able to validate, every aspect of this. Then when we move from that to the profit models, there are several profit models today that fintechs work with, ranging from usage to access fee to advertising to commissions to subscriptions to access licensing, right? But the most common ones are usually the subscription fees or the commissions that you get from every transaction that you do. Sometimes some fintechs that are also licensed can offer licensing as a service and sort of make money, from that. Then when we talk about the fintech, sector spread, I would say in Nigeria, the business model that I think a lot of fintechs are going for is, digital payments. So looking at the markets, the largest segment, which is digital payment, had a total transaction value of about, I think, $14.2 million, as at this 2023. And as at 2021, I think Nigeria had over 140 fintechs, right, in terms of, and, all of them across this different business model that they've developed. But I think digital payments is like the largest business model that a lot of fintechs are adopting in Nigeria currently, right? And we know that Nigeria, which is obviously the largest in Africa, I would say that we're getting the most funding. I think as of 2021, Nigeria also accounted for about, I think, 53% or thereabout for fintech startup funding. So it means that there's a lot of attention, in the Nigerian space in Africa for funding, from VCs and angel investors and, all the seed rounds that are going on. So that's just a brief overview of, what I can say for fintech business models, profit models, and the spread in total. So I hope that's a good introduction. Thank you.
Thank you so much, Ms. Maria. That's very good. While you were speaking, Mr. George joined us. Welcome, Mr. George. Before Mr. George, okay.
I said thank you.
All right, you're welcome, sir. The next speaker is going to be Mr. Ibrahim KG. Welcome, Mr. Ibrahim. Hello, Mr. Ibrahim, can you hear us?
Hello. I can hear you. I can hear you. Yeah, what's up? Apologies joining late. I just have one or two things. Okay, so thanks for having me. So where do we start? I've heard somebody present.
Yes, sir, she's one of our mentors. She's the first.
The way she was trying to break it down, so I will just, so pretty much, I like to start from the issues that we have in the market. Yeah. So if you talk about fintech, I think we need to start from the problem-solving angle to that. Yeah. And because what I'm saying that is we have more than 15, 20 fintech solution within the year, every year now, in the last 8 years. But then you find out that maybe out of the 15 or 10 we have that shoot up in the year, you just have one of them that lasts second year or third year. Yeah. And those reasons being the fact that some of the solutions we tend to build are not real problem solving. Yeah, we just want to jump into the FOMO, which is fear of missing out. But for me, I don't believe that should be. Yeah, because there are a lot of problems. And again, outside the fact that some of us just want to be solution, we should also realize fintech is beyond. Today is beyond payment. today is more embedded. And when I say embedded, it doesn't mean a platform that helps you do, or a platform that is helping you do, say, maybe buying, or a platform that is helping you do operations that you're not adding payment to. No. What I mean is embedded actually solving even the African poverty, the African working capital, the SME edicts. Yeah. And this is typical because one, we live in a continent where there are no credit scores. One. Secondly, we live in a market where the biggest competition for digital payment is actually cash. Yeah. The third part is we have people that do a lot of transactions, but they can hardly trace or track whatever it is that they do on a daily basis. Yeah. And so if you can't trace and track, you can't measure what you do, there are no ways you'll be able to improve on them appropriately. So 3 areas there. Yeah. So one is, I mean, you look at like Relief. There's a startup called Relief. It's a fintech, supposedly a fintech, but what they do typically is they identify smallholder farmers, and they know those smallholder farmers will have one issue or the other with regards to the operation, probably maybe getting farm input, buying or running mechanized farming, warehousing, or value chain. Yeah. So what they get into is they bring in funds, they bring in partners to help relieve farmers with a crowd sourcing method, which is, because they have more money, they can reach more farmers. And when they need to get some of these items, they can go as far as meeting OEMs, they can go as far as meeting maybe First Bank to run some of these programs. So that reduces the unit cost of implementing whatever it is they are implementing for this pocket of smallholder farmers that they have in different locations. Yeah, that is Relief. So at the end, what Relief also does outside providing farmers like a buy now pay later kind of resources to relieve them in every area of their operation, they also try to buy back whatever it is the harvest the farmers get, because they have access to maybe some of the biggest FMCGs that will be needing some of these outputs. Yeah, so they help them to resell some of these items. Yeah. So having said some of those, why I also said is a problem is, so we find out that those problems persist, and there are a lot across different industry. But often the time when we decide to go in and build a payment solution or a fintech for that matter, we really don't consider some of these very critical parts. We just feel, what is the next payment? What should it be? And where should it happen? Whereas it should be the other way around, where what would be the end goal of a payment? Yeah, because if you look at payment is gone beyond payment. Payment is now banking. So if you notice globally, the only guy that affects the economy damn very much after the government is bank. Yeah. So typically payment is now bank. So, but as a payment, you need to decide what part of the banking do you want to take? Are you going to be doing discounted ledger, maybe supply chain financing for maybe for merchants who sell groceries? Do you want to do the agro, or do you want to do even buy now pay later for real estate operators? Because if you look at the real estate market that we have, there are often a time where some of these developers have lands to be developed, and they even have off-takers already. But the bottleneck is accessing finance to be able to deliver on those projects. So why not where you have a financial solution that says, we will get you XYZ material, which is like material financing or real estate financing, but you've broken it down. So it's part of a bigger solution or a bigger segment of, or a part of a segment a larger bank should be solving or have been solving somehow. Yeah, but they can't. The thing is, they may not just be able to solve everyone's problem. Yeah. So, but what payment is now doing is niching it down, segmenting it, and making sure those problems are solved. Yeah, that's on the part where I said we have a lot of issues building solutions, because you will now notice a lot of maybe a couple of persons out there want to build payments, Web3 payments. For what? For who? You need to ask who, when, how, where. Yeah. These guys, like I said, our biggest competition is cash. in this part of the world, in any emerging market. So if your competition is cash, your digital integration, or the fact that your user has not been able to embrace totally interacting with digital platform, and I mean that you're still struggling with. So why are you going to Web3? Yeah, that is one. Secondly, is if you look at some of the solutions we have existing, they are also a lesson for a lot of us. Most times we want to build models. Yeah, we want to be profitable and all that, but we don't look at what is existing, what works and what doesn't work. And for me, the same way we have maybe 6 top banks, the Zenith Bank, GT Bank, First Bank, and all that, we could see have some 10, 15 top in different niche fintechs. That is possible. Otherwise, in terms of the model we build, one is we need to anchor it on the real problem or real business. Second is we also need to do a lot of discovery, which is, okay, so what is prevalent or what is relevant in the market at present? Because again, we also need to realize some of the very first or initial payment provider or disruptors in the market, they will also still get to their peak. Yeah, there's a peak for everyone. Yeah, we have some other guys unbundle what you've sort of bundled again. They try to unbundle it. I will take an instance. Cowrywise has been profitable from their, I think, second or third year. And that's why you've not seen them go raise. Yeah. So if you want to talk about modeling profitability, for me, it's really about the business. Because if you start from breaking it down, the cost structure, unit economics, those won't work if you are in the wrong industry. Those won't work if you are in the wrong niche. Those won't work if you built the wrong solution. Yeah, there's an app out there. I saw their pitch deck. They built a very wonderful solution, which is payment via WhatsApp. Yeah, very easy payment via WhatsApp. But I think one thing they didn't get is they didn't get the business right, which is a lot of UX research and all that. See, when you talk about profitability, modeling, cost structure, they are far. You could make mistakes on them, but if your solution is one that will work, if you are within the right market, you will stumble. I mean, you will make a lot of mistakes, but you won't entirely get damaged. You will get corrected along the line. But if you're in a wrong space already, in terms of business, in terms of solution, it will be very hard to correct that. That very payment infrastructure builds something very, very useful. And I would also say it makes payment very easy. But I don't think they've considered the user, yeah, which is a lot of UX research that needs to go into whatever it is that you are running, yeah. So, I mean, if you negate the fact that you want to do your UX research, and your UX research is not just one that you do subconsciously, you do both the conscious and unconscious one. The conscious one is one you do that you set out to establish a program, your persona, the target audience, the population sample, and all what have you. That is very structured. The unstructured one is you observing the market. Yeah. Observing it without interacting with it, which is non-overt kind of research, where you don't even interact with the market at all, but you are observing the trend, the mega trend, use cases, and all that before you jump into any solution. You may be jumping into a solution that is very brilliant, but in wrong timing. The market may not be there yet. Maybe you are building WhatsApp for payments, QR codes. You are within the very wrong time. People are still looking for cash. So making them go bend to use your whatever beautiful, good-looking QR code or WhatsApp payment will be very wrong. Yeah. So let's now go back to when you talk about fintech modeling, pricing, and costs. So if you established, validated the market you want to, the real problem, the headaches you want to solve, it now makes sense to start it entirely. Yeah, because between you and I, you will never get the pricing right. It's the very unknown region. Yeah. So, but you need to get into the market. Yes, it's not a crime to get into the market not knowing one particular part of your product or infrastructure, maybe pricing. The larger parts, which is the very top costs, and how to deliver it. The first thing you need to the very first level you need to establish is get some of the very first users, Don't get them because you know them, but make sure you get the guys that would give you feedbacks. Yeah. So if you get folks that will give you feedback, there's a high chance that they will tell you they can't pay X, they can pay X. Yeah. That is one. Secondly, is when you get into the market, you need to also do some comparative analysis on pricing. So there are possibly alternative to what you're offering that are already established and has some pricing lists that you could look through. Yeah. So you could look through the pricing, look at your unit economics. If it favors, if it works, if it doesn't work, look at your burn rate downline, maybe 1 year, 2 years. And if it will still fall to cash flow positive, and you think the purchasing will and power are there for those who are your primary target audience, it makes sense. Yeah. So the third side is you could throw in any pricing. Just do random guessing, have your pricing there, then be very open to feedbacks. Let people talk about your pricing. So what that means is you don't have enough data to justify whatever pricing you need to bring on the table, but then the users have a way of giving you those pricing head-ups. So somebody is telling you, no, even Trilo is pricing X, you quickly pick that and you are readdressing your pricing. Yeah, those are on the area of pricing. On the area of costing, it's also very open, and you must remain open-minded. You know why? You will be consuming other guys' infrastructure and resources. Yeah. Whatever it is that you're building, even if you're building food industry, at the very first level, you will still need some other guys to, in terms of infrastructure, in terms of leverage or partnership. Their cost, with whatever case you want to build for your cost internally, doesn't make it entirely already. Their cost will feed into whatever cost you are looking at. So you need to first consider them. So you don't want to price ahead when you still have about 3-4 APIs to consume before your end product even becomes one that people can use. So you want to consider their cost into whatever you have. Consider it on an annual basis, monthly basis, break it down to daily basis. Just be very strategic about it. And those will now tell you where your costing is. You now want to break it down to daily, to each ARPU, which is average return per user. And if it matches, what should make your business sustainable, at least at the very first 3 years or so. And afterwards, you then, after the 3 years or 2 years, you're then also looking at what should make your business profitable. Yeah. So those are, looking at it from the very top, very broad angle to it. Every other thing that you'll be doing, alongside all of these I mentioned, which is what I think, yeah, would just be theoretical, because you already have a lot of the resources, the data, and some level of, maybe not mature data yet, but some bit of data that are looking mature for you to make some of these very key decisions. Yeah. And because why I'm saying all of this, to end it all is, so let's take the Momo market, for instance, the agency banking. Yeah. So if you take agency banking in Africa, the guy that has the least cost are just two. That's M-Pesa in a lot of Eastern African parts. Yeah, most cities in East Africa use M-Pesa, and MoneyPoint in Nigeria. I think they also moved to Abidjan and Dakar recently. And for a lot of reasons, I know why those guys have those costs. For M-Pesa, it's largely because they're running a lot of scale. Anyone will do that, or any organization should be able to achieve that. For MoneyPoint, it's never because they're running scale. Yeah, everyone in the market is similarly running scale to some extent, but MoneyPoint designed some internal strategy that, of course, he exposes them to bigger risk. Yeah, he exposes them to a lot more risk, because what that means is let me start from the granular. So today, MoneyPoint has funds in almost all the banks seated there. Yeah, and they also have a good relationship or standing order with all the banks. So what that means is, per transaction that you do with MoneyPoint is operating those transactions internally. Yeah. So if you bring a GT bank card, yeah, they are charging that GT bank card to MoneyPoint's account in GT. So there are no charges. Yeah, even if they are charging very, very fraction. So they're not taking it through MSAs or other, other infrastructure layer that they are supposedly supposed to operate with. Yeah, they don't so often take it to most times through NIPS. No, maybe these guys, InterSwitch or other guys. Yeah. So most of the reconciliation, there's headache. So the risk there's a lot of headache for treasury, for reconciliation, and there's a heavy risk that some of these transactions, if they didn't hit, actually, if they don't hit their hand, so they're having to go through a lot of fraud cases too. Yeah. But because they've established internally that as a business, they've established their own risk threshold that, oh, we want to grow. And if we need to grow, there will be risk, there will be fraud. So at the expense of that growth, there will be risk here. But you just need to tell yourself, for growth purposes, we've outlined $100 million. Whatever we spend to achieve growth in 100 million, we are good. So even fraud case, yeah, we are good. Because if you close your, so it's typical of saying you build a payment platform and you want to run referral system. Referral system is the biggest area prone to attack, fraud, wallet attacks and all that, because your surface area is very, very open while you're doing referral. And these guys know how to attack you well. But as a business, maybe like Pay or maybe Kuda, they may decide that, oh, our risk threshold is X. So we will go ahead and build referral links, regardless of the fraud system and attack that we may be prone to. Because we know if we burn, if we get caught, if we get defrauded, we still have the bandwidth in terms of our, and because we don't want to close that channel. Referral channel get us thousands of users, numbers that we are presenting to our investors at Interval. So that's some of the key decisions you need to make as a business, essentially. So if MoneyPoint is running an internal switch system, is a lot of risk, like 10x risk, but they decide to take it for growth purposes. Yeah. So it's a backward pricing and costing system. So they've taken some risk internally to design their system in a particular way, just to be able to fight the pricing, to take the pricing war. Today, MoneyPoint can go as far as, I think today they are doing 0.5 or 0.05. They can even go further low on their card transactions and even transfer and all that. That's a bit I could divulge. And we can learn furthermore about all of this. But what I'm saying in essence is modeling, costing, pricing only comes forth after we've been able to justify, validate a real problem we're solving, sustainable, scalable, that is sufficient. And also maybe internally we have some strengths. So those are some of the very way to think about it forward. Thank you.
Thank you so much for that, Mr. Ibrahim. Our next mentor that we'll be hearing from is Mr. George Onyem. Welcome, sir. Thanks for joining us.
Yeah, hi, Amina. Good afternoon, and how you doing? And it's nice to be here again. Mariam, very wonderful intro you had there. Grabbed quite a bit. Well done. And Ibrahim, very, very wonderful one. I hope I'm very loud and clear. I hope you can hear me loud and clear.
Yes, on my end, you are.
Oh, okay, great. Interesting topic you have today, as usual. Talking about business models, talking about profit models. And I mean, beyond a fintech, you can't think about a business or think about starting an initiative or think about anything you want to do personally for yourself without thinking how you're going to either make it last or make money for yourself. For those of you that know me here very well, you know I'm a very big fan of you and your enterprises. So even if you want to go to school today, there's a reason why you want to go to school. You want to graduate, you want to find a good job so that you can make money. Because at the end of the day, it's how do you convert or whatever effort you're making, how do you convert it into profit for yourself, in whatever enterprise you face. So the concept of business model is even where I think I want us to look at this conversation from now. A lot of our the speakers I had did a very wonderful job in digging into the specifics around different kind of models or different kind of ways, fintechs look at their product or their business and how they interact with the market. But let's look at what is a business model to even start with, and then understand how this relates to what you want to do, whether being a fintech, whether being a legal practice, whether being anything you want to apply it to. Now, the concept of a business model is very simple. Without all the technical, what we call technical jargons out there. How do you sell or provide your product or service in a sustainable or profitable way to your target customers or beneficiaries and be competitive, right? I'm very careful how I combine some of the words, and I'm going to pick them very quickly, one after the other. How do you sell or provide? Sell versus provide. Your product versus service in a sustainable / profitable way to your target customers / beneficiaries, right? And be competitive. How do you do that? The process or the act of figuring out how you do this is basically the long and short of a business model to you. Now, let's start by what is your objective when you want to think about your business model? You first of all, what is your objective, right? For what you want to do. Am I looking at the business model for my entire business play long term? Am I looking at a model that I want to use to quickly go to the take my business to the market on a short-term basis? Whatever objective, you want to be very clear on what you want to achieve with that model. Now, you start by looking at the first element of your customers versus beneficiaries. Who are my customers and who are my beneficiaries? The beneficiaries of my product or service. Remember, I talked about how you can take your product, in a very sustainable or profitable way to your target customers or beneficiaries. Now, who are your customers and who are your beneficiaries? In some products, your customers are your beneficiaries. In some products, your customers might not necessarily be your beneficiaries, or what some people call users, the users of your product or your service. They might not be the people paying for that product. They might not be, the ideal people you refer to as your customers, the people paying for that service. And let's look at some casual examples. Today, if you're watching cable TV, Big Brother, like a lot of our young people do, who to you is Big Brother's customer, and who are the beneficiaries of Big Brother when it comes to multi-choice? Now, who are multi-choice customers and who are the beneficiaries of that product called Big Brother, right? The guys that make Big Brother money are the advertisers, people that advertise their products while the show is going on. Those are the guys that put money in the pockets of Big Brother. But who are the beneficiaries of the program? It's you and me that sit down and spend a lot of time to view, and watch the TV. We are viewers, we're enjoying the product, right? But it's not all of us that, quote and unquote, pay the money that actually runs or keeps that show, up there, right? If you look at the guys that put stuff on Netflix, the people that do sitcoms or shows, who is the customer to them and who are the beneficiaries, right? So they figured out that how do I approach my customer, which is Netflix, which is Prime, Amazon, the various cable TVs where they put their shows, DSTV, different from how they relate to the beneficiaries of that product, the viewers that watch the shows, the series, right? Now, if you come to the fintech play, if you look at the tech side, Facebook, we all use Facebook. Who are Facebook's customers and who are Facebook's beneficiaries? We all use Facebook freely, but there are people putting Facebook billions of dollars in Facebook's pocket every single year. And those are the guys that advertise on Facebook, right? So the way Facebook relates to the advertisers, the model they sell to the advertisers is different from how they relate, to you and I that are the beneficiaries of Facebook, or what we call the users of Facebook, right? If I bring it down home to the country, OP. Now here's an interesting one, where within the company, we have product lines that have different users or different customers and different beneficiaries. If you look at OP agency business, the one we call the POS business, who are the customers of OP and who are the beneficiaries or the users of that service? The agents, the POS agents that carry the OP POS machines where we do withdrawals from, they don't use the service, right? But they are the direct customers of OP. We use the service. We go to those agents to go and withdraw cash, are the beneficiaries of that service. But the customers to OP are the guys, the businessman or the guy on the kiosk carrying that device for OP. Now, the same OP have an account where the account holders, you and I, are also the beneficiaries of that product, right? Because we use we have an OP account and people transfer money in and out of those accounts. So you have to first of all understand who is your customer and who is your beneficiaries. Are they the same people or are they different people? So that your business model recognizes these two people, whether they are same, one and same, but they are two different people, and how you interact with them, to meet your objective. The next guys I want to talk about there is the product. I said to sell your product / services. Yeah, to sell your product services, right? You need to understand when you're thinking about your business model, how does your product fit in to those target customers and beneficiaries I just mentioned about? How does your product come into play with them? Do they want this product? And are they willing to pay for it? And a lot of times, people that start companies, especially fintech, they confuse these two things. Wanting the product and willingness to pay for it is a different conversation when you put out the product and say free, use free. It's a different conversation when you put out the product and someone has to pay for that product, right? So how that product, you need to understand where your product fit in. Have you done some? I heard someone talk about hypothesis earlier. Hypothesis is just simply, your guesses around how people will use your product. So you need to understand, where does your product fit in? Have I validated that people are willing to pay for this product, especially the guys that are my customers? And do the people that are my beneficiaries, do they want this product? Now, what is the nature of the problem that I'm solving? Is it a need or is it a want? Is it something cool, right? Or is it something that it is urgent and immediate? Like if your hair is on fire today and immediately your hair catches fire and someone gives you sand on a normal day to put on your hair, you will reject it. But if you look around the entire place and the only thing you were seeing in that place was were gas cylinders, that if you cannot put the gas cylinder on the burning hair, of course you burn your entire self. And someone offers you a bag of sand for 10,000 naira. If you were 10,000 naira in your hand while your hair is on fire, before the person finished saying that 10,000 naira, you snatch that sand out of the person's hand and pour on your hair, right? So is it an urgent, or is the problem that your product is solving, is it an urgent and immediate problem, or is it one that they will take your time? Because that would determine your model. That would have an impact into how much or what you can do with that product. The other parameter, other factor that I mentioned in that definition is, to be competitive. These things will also affect how you think about your model. And that's why I'm raising some of those questions you ask yourself, right? What is the alternative to the guys, these target customers that are going to pay for this product? What alternative do they have with this problem I'm solving? Do I have an unfair advantage, over this alternative that will make them have to come to me? Why is a CUDA, why is an OPay, growing fast with the accounts? If you look at how easy it is to open a CUDA account or how easy it is to open an OPay account with the smallest of documentation, right? That was the opportunity they got into the market. While the banks needed you to bring all the necessary validation and documents before you finally have an account, you see a roadside person that barely manages to even have a valid ID card, as the only thing he has as a document, can open an OPay account, and he has a bank account, can open a CUDA account, can open a PalmPay account, and he has a bank account. So the alternative he has is going to a bank, right, to go and do a proper documentation. But here I have something that he needs, and the other alternative is for him to go and look for something he doesn't have. So you need to understand, where does my competition stand with regards to my product? What alternative do they have? And what advantage do I have? Because these are the things that will determine what should you do, how you should get that product or that service to that target customer profitably and be competitive. And of course, the last one was where I said sell or provide. How you sell or provide that product and that service. Is it going to be free? Is it going to be a freemium so people get free, and then of course after a while they start paying for something? Or is it an urgent need that I can charge them immediately and they will pay for it because they don't have, as in it's burning, it's the problem that is burning, right? What kind of pricing strategy would I use? Is it competitive pricing? Is this the one that everybody is killing themselves in the market? So I have to be the lowest guy that will charge? Or what I'm selling has a particular value that I'm not playing the pricing game? I can charge above, others because I'm not charging based on, salt is 5 naira everywhere in the market. No, I'm adding a particular value that can make me charge based on my value rather than what my competition is charging. So how do I sell to these people? So when you look at these 4 elements, it come back to thinking about these different things around these 4 elements that will make you determine what business model you're going to apply to whatever you're doing, be it a fintech, be it a legal practice, be it whatever it is you're doing. How do I sell this my product or my service? Or how do I provide it free, this my product or my service, in a sustainable and profitable way? How do you make money to that target customer and beneficiary, depending if they're the same people or if they're different people, and be competitive to remain also relevant with the realities around you, with the alternatives that they have? Answer this question and you have a business model. Thank you.
Thank you so much, Mr. George. Our presenters ready? Our presenters. Okay, while we are waiting for our presenters, Mr. Hussein, can you take our pictures for social media? I would like everyone to turn on their camera and smile for the camera, please, while Mr. Hussein takes this screenshot. Mr. Hussein, if you're ready.
Yeah, I've taken some screenshots. Yeah,
Okay.
Okay, we can proceed.
Okay, thank you so much, Mr. Hussein. Are our presenters ready? Sorry, Mr. Hussein, can you announce? Okay, okay. Please start.
Okay.
You have 10 minutes.
Can you hear me?
Yes, we can.
Okay. Can you hear me, please?
Yes, proceed. We can hear you.
Okay. I'll be taking the first topic, that's fintech business models. Okay, let me share my screen. Okay. Can you see the screen?
It's loading.
Okay.
Yes, we can see your screen now. You have 10 minutes, please. So,
Okay, I want to go. Okay, thank you. I'll be taking the first topic, that's fintech business models. And then from the slide, okay, it says a sound business model is a fulcrum upon which a fintech can scale. And then it said fintech business models are thus plans for fintech business, which includes operating strategy, revenue strategy, and intended customer base. What this means that what a fintech business model aims to do is it tells you about the operating strategy, the revenue strategy, and the intended customer base. These are the plans that you can take, or the way you can make your, or what you can base your fintech on. That's what the sound business model is. And Mr. George also talked extensively on what these business models are. Like, there are things that you should take into consideration before deciding on which model to actually base your fintech application on. It also says that a fintech business model is a pillar of how the fintech works and moves towards its goal. He says that this line means that this business model explains the process or the way that your fintech is going to take, or how you're going to move, or whatever you're going to do to achieve whatever it is that you aim to sell or service you aim to render to your target audience. It says it leverages on tech to enhance the financial service industry. And what this means is that basically this business model uses technology to enhance the financial service industry. Now says the next slide shows the fintech model determinants. What this means is that the things I should put into consideration before deciding on which fintech business model to actually select or choose to go about. So first of all, the first thing you should put in consideration is your target market. That's to say that who are the people, like who do you hope to render the service?
We are still on your first slide.
Sorry. Okay, let me try and move it. Sorry. Okay. Sorry. It's on the first. Let me move to the next one.
It's okay.
Okay, yes, I'm there. Yeah. So this fintech model determinants is like, what are the things you should put into consideration before determining which fintech business model to actually choose. So first is your target market. That's who is your audience? Who are you rendering this service to or providing this product or service to? This will determine which fintech business model to use. And the second is the type of product or service you're rendering. That's to say, what do you hope? What do you wish to offer? What do you want to render to your target audience? So this will also be another factor that will determine your fintech business model. And the last is the regulatory environment. This is like based on where you are or the society you find yourself. Like what are the regulations in place concerning which business model you want to, what are the rules guiding that business model, guiding the type of product or service you want to offer. So some of these three and more will determine what fintech business model you would have to choose for your fintech application service. Thank you. The next slide. Okay. So in that says the major fintech models, okay, it's coming. The major fintech models. So we have the digital banking, digital wallets, peer-to-peer lending, alternative insurance underwriting, and payments gateways. These are the 5 that we'll focus on here from this slide, but then there are still more models, but I'll be focusing on only these 5. Thank you. The next slide. Okay. The next slide. Okay, the first one is digital banking. And this digital banking, this offer bank accounts based on a fully digital infrastructure. So this to say that instead of the normal traditional banking methods, this digital banking gives off whatever the normal traditional bank would have offered to us, but the fully digital infrastructure, not the normal physical banks or the traditional method that's where we go to banks, not that sort of service, but everything is fully in a digital way. It involves web-based services and a high level of automation. For instance, generating APIs that enables cross-institutional service for delivering banking and financial transactions. What this means is that this digital banking, it helps in a way that we are able to have access or make transactions from any service or platform you're using to another type of platform. And it says users can access financial data, initiate money transfers through mobiles, smartphones, desktops, and ATM services. Okay, the small note I have also says that these web banking services can be availed online without having to be physically present at the bank. So what this digital banking aids you is that it brings banking to your convenience, in the sense that you don't have to go to the normal physical bank to have access to whatsoever service you want from a normal physical bank, but rather is at the convenience of your phone or your laptop or any mobile device that you have. And it says, for example, your most banks have mobile apps now. So that's what these mobile apps do. They give you the business model that they provide for your digital banking, meaning that you can make a mobile app. So let's go to the next model. The next model, come and let me slide. Digital wallets. It says this provides secure payment system, and second, users can fulfill purchases quickly and easily by using digital wallets. What this is say, this digital wallet is a form of fintech that runs on mobile devices to make transaction and pay and track payments histories. Using this digital wallet, you can like preload virtual money into your e-wallet. Your e-wallet is a sort of like cash that you have in an account or in an app, but it's not physical, you can't see it. But using this wallet, you can now make online transactions. That's what this digital wallet does.
You should be.
It says it allows usage of online. Okay, it allows usage of online transfer technologies to complete transactions with merchants who accept digital wallets. What it says that it allows you to be able to make financial transactions with merchants. These merchants are like businesses or business apps. That's you can make transactions or make transfers or send or receive money with these other sort of businesses or apps that also accept transactions from this sort of digital wallets. Examples, they have Google Wallets, Google Pay, and OPay. The next is peer-to-peer lending. What is generally this peer-to-peer? Peer-to-peer lending. Okay, that's the next. What it means is that it enables individuals to obtain loans directly from other individuals or businesses. This creates convenience. Getting a loan from a physical bank can be a whole lot more stressful as it involves so much paperwork. But then this peer-to-peer lending business model brings lending or makes it very convenient for people. You don't need to go through the rigorous process of bringing of the whole paperwork that is involved, and even sometimes you may still not be eligible to such loans. So this peer-to-peer lending makes it convenient for both businesses, or even both small and big businesses that want loans, or individuals that want loans. It makes it convenient in a way that you can get loans from people. That's what this peer-to-peer lending does. An example is Funding Circle. And this Funding Circle is a sort of commercial lender that's created an avenue or made a community, that's formed a community for people to be able to get loans and also pay, and also the people that are lending this money, they're also able to get their interest, and in a way is a win-win for both the lenders and the creditors. The next is alternative insurance banking. Let me slide. Sorry.
Your time is up. I'll give you 1 more minute to just round up.
Please. Alternative insurance underwriting. Oh, sorry. God. Sorry, I'm having issues with my screen. I'm trying to slide to the next one. Oh my God. Okay. Sorry. What's wrong?
Or you can just continue without the slide.
Okay, sorry. Okay,
Just
thank
briefly,
you. Okay, I'm in
just
payment gateways now.
summarize it.
This gateway uses platforms where, it's there. So alternative insurance underwriting, it says this model aims at supplying smarter ways to choose policyholders, provide better terms and conditions, and offer alternate payment options. So what this is a sort of like a digital insurance company, something of that sort. So instead of the whole process, like this business model, it helps to create a way that such insurance fintechs are able to have access or know about their customers or people that they are about to give insurance to. It says, unlike traditional insurance writing, alternate insurance underwriting captures both quantifiable and unquantifiable data like medical history, lifestyle, and social signals. Okay, I'll go to the next one. That's payment gateways. Okay, payment gateways, yes. Okay, it says that, payment gateway uses platform where customers can pay for a product on a merchant's website. The gateway is, and it says, merges all payment methods into simple apps that internet retailers can easily afford and include on their website. This just basically means that people are able to make transactions using their cards, like both your credit or debit card. You're able to use it to make transactions at your convenience, and they are also able, these fintechs can also take their own percentage or their profits from such transactions. And it says that's the aggregator, that's usually the banks, charges a merchant discount rate on each transaction that goes through it. So thank you very much for listening to my presentation. Thank you. I'm done.
Thank you very much. Is the next presenter ready? Or we should take comments from our mentors on this? The next presenter, please. The next presenter. Susie, please stop sharing the screen so the next person can take over.
Hi,
Ibrahim Baba, are you ready?
I am ready. Can you hear me?
Okay. Susie, kindly stop sharing your screen so you can take over.
Can you guys hear me?
Yes, we can hear you, Ibrahim.
Uh,
10 minutes, please. Let's adhere to the time.
Yeah.
Susie, kindly mute your mic.
Can you guys?
I think my network is bad.
Hello.
Yes, we can hear you, Ibrahim. Let Susan mute her mic. Go ahead, please.
Okay. First, I want to confirm if you guys can see my screen.
Yes, we can.
Okay, thanks. All right, so I want to talk about sector split. So next slide, I have sure.
Ibrahim, can you be a bit louder?
Yes. Can you guys hear me? Am I louder
Yes,
now?
I hear you now, yes.
Okay, so now let's define what fintech is. We can actually say fintech is a term used to describe technology, legal financial services, which includes things that we all know, mobile banking apps, investment platforms, payment systems.
Sorry, we can't hear you.
Hello?
Susie, are you there? Can you mute your mic?
Susie. Hello?
Hello?
Yes.
Continue, please, but you should be a bit louder so we can hear.
Yes, I was citing examples of fintech. So I mentioned mobile banking apps, normal ones we can transaction daily. So these are known as fintechs. We have online investment platforms. We also have payment systems. This system currently like Steve's payment systems powered most of these fintech platforms. Most recently, we have digital wallets. So now, let's go over profit models. Typically, this model help fintech generate through various ways. First one, we have subscription-based models. So subscription-based models is actually a model where the company charges subscription fees such as or investment research tools.
Ibrahim, we can't hear you. Are you using something, maybe an earpiece or something like that?
Yes, I'm using an earpiece.
Yes, please, can you just put it on speaker? We can't hear you.
Yeah. Hello, is this better?
Yes, it's much better. Thank you.
Okay. So examples of the model. I want to go over the example of the model. The first one on my slide is subscription-based models. So subscription-based model is actually a model that helps these fintech companies. It helps them charging subscription fee for access to the features or the services they're actually rendering to their audience or their customers. The next one we have is premium models. Premium models actually models. Hello?
Yes, we can hear you. But you have to be a bit faster. You have to summarize everything because we have just 5 minutes left or 6 minutes.
Okay. So let's move to advertising models. Some fintech companies generate revenue through advertising, such as credit card companies that offer reward programs for specific types of spending. Now let's go over commission-based models. Commission-based models are transaction.
No. I think his network went off. So Ms. Mariam, can you just give a comment on the first presentation before he comes. Susie.
Hello?
Oh, Susie, can you mute your mic?
Okay. I'm doing
Yes, thank you. Miss Mariam, kindly proceed. Sorry about that.
That's okay. So I listened to the first presentation, and it was just an overview of some of the business models that fintechs adopt. So what George has been able to do is to break it down further as to how business models are developed, and the different elements of the business model which he had done justice to. So the different areas that have been discussed, from digital banking wallets to peer-to-peer lending, are like the models that, or the businesses that the models are sort of adopted for, right? And it's much more than those models that have been discussed. But I think you did a good job by identifying them. But one thing that I picked that from the presentation that I think it's important to sort of talk about is the regulatory part. There was this slide that had the target market and the types of product and services, and the regulatory environment equals to the fintech business model. So that's also a very key point to make, especially for the industries that the fintechs is the financial technology, right? They're all financial technology. It means that they deal with funds. And it means that in different environments, like Nigeria, for example, if you're playing in some of the sectors and space, it's important that you have the required license to be able to do that, because it involves, people's funds. So if you're running a digital bank, or you're running a digital wallet, or you're even doing peer-to-peer lending, I know that there's the Lagos State lending license, which a lot of this fintechs that go into the lending space get to be able to offer loans. So basically, even to offer a payment gateway, which was one of the models that was discussed, you need like a PSSP license, which is the payment service provider license, to be able to offer the service. So that's also a key point that I think it's important to note when developing some of these models, that if you're playing in a space that requires the license, it's important that you get the required license, so that it's easy when you start small, but eventually when you grow big, you're holding people's funds within a wallet system. Even though it sits in a bank, the bank does not sort of have control over those funds, because it's just like a pool of funds from different wallets sitting in a house or a pool account within the bank. And that account belongs to the fintech. It means that they sort of have access, to those funds, and they can do whatever they want with it, because they're really not regulated, as to how those funds are being used. So if you're running a digital wallet, Paga, for example, has a mobile money operator license, which allows them hold funds within a stored, the wallets are stored value wallets, where you can hold funds and it sits within the banking system. So if you're playing in any of these spaces that that have been mentioned in those fintech models that were described, you need to get the required license, because it involves funds. So that's the point that I wanted to stretch on and make reference to in regards to. But overall, it was a good presentation. You just need to dig a little bit more as to all the different elements around the fintech business model. Thank you.
Thank you so much, Ma. I hope the group members have taken note of that. Ibrahim, are you ready to continue your presentation, or can we take comments from other mentors first?
Yes, it was like my network was actually bad, but I'm back. I don't know if I can continue.
Just summarize everything within 5 minutes. Just be done within 5 minutes so we can continue.
Okay, so the summary would be, in a recent study, EY found the adoption of fintech service has increased from 16% in 2015 to 64% in 2019. So if we look at the more reason why the fintech is actually spreading, especially in Nigeria today, one reason is consumer demand. As consumers become more tech savvy and they become more comfortable with their devices, mobile phone, laptops, network and all, they are increasingly seeking out fintech solution for their financial needs. Secondly, is actually regulatory changes. Many countries have introduced regulations that are favorable to fintech companies. Today, we have the likes of JIIPCCMIP and other platforms that helps people with foreign exchange transactions. And very recently, I read somewhere where CBN is welcoming fintech stakeholders or people who are building fintechs to come and test run their CBN box. So to the programmers, then it's been difficult to actually get partnership with CBN. It's now easy. So these are the changes that is actually pushing in and making fintech spread more. The next one will be investment. We've had quite a lot of investors coming in to invest heavily in fintech industry today. These are one of the reasons that fintech has become very popular because of this investment. Everyone wants to get some cut of that money. So they are building platforms and making simplifying some things that they thought would be very much welcoming to their customers. The last one would be partnership. The banks now can see that almost all transactions are moving into digital and neo systems. They now open their services to other platforms that can actually integrate one or two of their APIs and build or simplify platforms where each partner would actually earn or generate income from this partnership. These are one few reasons that is actually making fintech spread. Thank you. Thank you. I'll stop here.
Okay, thank you very much, Ibrahim, and thanks for being as brief as possible. I will forward. I would like Mr. Ibrahim KG to comment on the two presentations. Okay, I don't know if he's still online. Let me check. Okay, I don't think he's with us. Mr. George, can you comment on the two presentations?
Yeah, okay, thank you. You can hear me, right?
Yes, we can.
Oh, okay. Good comment so far. And for the presentations, they were quite spot on. I didn't really get the second presentation a lot. I think, I don't know if it was from my end or the network interruptions were a whole lot. Yeah, but the first presentation was also very spot on, both in the area of looking at, just like Marianne very well captured, looking at those things behind the scenes that you think about in coming up with those models, part of what my focus was. And of course, looking at the end products of what those popular or common models out there are. So they try to balance those two sides of that conversation, which was good. So it was a very well put together presentation on the topic. Even the only part I think I probably would mention is I typically always like for these things to be relatable, especially as regards to maybe either giving localized case studies, or try to situate it to the current context, within our local environment, so that it drives, when you give examples, it drives home more. So they try to do a bit of that, but I think there could have been room for more. Now, on the second presentation, it was, like I said, I didn't get all of it very well, but the few that I got, they also tried to also do a good job in in talking about those various profit models around. I think I mentioned some part of it too, whether it's freemium, whether it's subscription based, and all those various available models that a business can use in determining how they exchange their product and services. So I think they try to focus more on the bottom line, like how do fintechs actually make money in the different kind of space, whether it's insurtech, whether it's wealth tech, try to bring out the different potential sub industries or sub contexts within the fintechs, subsectors within the fintech industry. That's what they try to do. But my final comment would just be that typically I'm always a bit biased to the why and the how more than I am to the what, right? Because the what sometimes can be very misleading. And I've been quite around a number of fintechs, and I've seen that a lot of guys struggle because when they're starting out at their fintechs, they look at a lot at the what. So these guys are doing, for example, Kuda is doing freemium, free transfer services. So let's put out our product. So for us to enter the market, we think we need to, and we are doing a wallet business. We need to do free transfer, right? To be competitive, because Kuda is doing free transfer. Maybe OPay is doing 25. So we are going to use our own model will be freemium. They will just select one of it, and then that is their own model, without understanding the why. Why is Kuda doing that? Right? Why is OPay doing this? Why is this guy that you're looking at, or this competition? Do you understand the why they are running that model? Or you're just interested in, this is the model they are running. It's okay. This is what I think we should run. This is what is common in our industry. So this is what we should do. So I'm more understanding the why. A lot of people in the industry screamed last year. I think, was it last year when it was reviewed that could have made a 6 billion naira loss? I think it was last year. Last year financials, when the 6 billion naira loss was Kuda was. And some of us were just laughing, like, why are people surprised that they made a loss? They Kuda knew they were going to make a loss from the beginning of the year, because their model already, with the model they came out with, they knew they were going to make a loss. Somebody is paying for your free transfers. It's not free. For every transfer you do in Kuda that is free, they are paying NIBS money, right? They are paying VAT on those things. So it's free to you. It's not free to them. They are paying for it, right? But they understand why they are doing it. It was an acquisition gain. Would I rather spend, for example, 100 million to try to fight the market with a First Bank or a GT Bank or an Access Bank, or should I take that 100 million and put it in an account somewhere and start using it to pay for transfers for people for free, so that I can acquire customers, right? So it's an acquisition game. So they are taking, is a cost of acquisition for them. Down the line, they probably have planned to be profitable in 5 years. Why you are worried about them being profitable in year 2? So you need to understand the why around models and not just the what. And say, okay, this is the model, is this and this, so let's do this one. So we as a fintech, we're going to do this one, right? So that's why I'm typically more biased around the fundamentals rather than what model is what, on the surface side. So just my little biased thought on this. Thanks.
Thank you very much, sir, for that interesting take. I don't know if Ms. Mariam has anything to add about the second presentation.
So I was also going to take it from the angle that George did. At the end of the day, somebody is paying the fees, right? And every fintech they have strategies as to how their business model is set up, right? Sometimes they are not even about making profits, right? And that's why they give it for free. Sometimes it's the data that is important to them. Data is like oil to some of these tech companies. And their initial strategy in the beginning is to acquire as many customers as possible. Sometimes they want to acquire, their strategy is to acquire for 2 years. And when they hit a particular number of users, they introduce fees, right? So they know that for the first 2 to 3 years, they're going to be making a loss. And sometimes they do these things to get funding as well, because some investors, it is the customer base that you have, right, that is important to them sometimes. And maybe the strategy is to also exit, eventually in 2 to 3 years, and they have that customer base to be able to exit at a set. Some valuations, some investors look at the number of customers you have, not even how much you've made, right? So some fintechs that start up do not understand these intricacies, and they just think, oh, my business model is to be free because this person is doing it or that person is doing it. But everybody has different strategies. It could be an exit strategy I have in the beginning, when I started. But somebody is definitely paying those fees, even if it's free for you as the customer. And that's the business model that they decided to adopt, for it to be free, right? And maybe introduce fees eventually. Then in terms of, the spread, the presentation was also spot on in partnerships. Banks are now, a bit more open and releasing their APIs, because it also favors them. The more fintechs they have on their platform, the more transactions you do. They're also growing their own numbers internally, right? And that's also helping. You also look at network effects and how, one platform is able to acquire so many users, and everybody wants to hop on that. That also helps, to spread the fintech team around, the country. And investors are also coming, so that's also helping to spread that further. Even though we know that currently Nigeria is a bit volatile in terms of businesses, but I don't think that's stopping investors from coming. But I would say that I think investment has sort of reduced, because if you look at some of the funding rounds that have been happening, I'm not seeing a lot of Nigerian tech companies, on that list. It's because of all the changes that are happening. Fine, we know that CBN is trying to be a bit more open now. There's the open banking, thing that was released recently, where and the sandbox environment has also been mentioned. So hopefully, that attention that we've had, we still have it, but I just think a lot of investors are a bit more skeptical. And I think fintechs too need to work on their business model more, because a lot of times you see that it's just the hype that we're seeing. Sometimes it's empty. They've really not done a lot of work in terms of looking at the entire limit of the business model and what will work, for a country like Nigeria. You also have to localize it. When you're coming up with models, you don't bring something from Latin America and assume that it will work in Nigeria. You need to test, the environment and localize it to ensure that it works. You go to the rural area and you're taking QR for people to use that. That's the business model you've developed. These people do not even have smartphones to be able to scan it. They use, most of these analog phones that they only text. So things like USSD will probably work, not a QR. So, these are all the things that we need to look at. The presentation was quite, spot on. It had a lot of, and I also agree with George, try to localize it, look at your context. You made references to N6 and Monzo. They have their own business model, and it could be free fees, but they are paying the fees on your behalf, right? And maybe it's to grow their customer base. N6, Monzo, Revolut, most of them are moving from being EMIs, which is electronic money institutions, to becoming banks now. So that's probably their strategy in the beginning, to acquire the customers, get to a point where they become digital banks and introduce fees. So it was a good one anyway. Thank you.
Thank you so much for that. Okay, we'll be using 15 minutes to take our questions and answers from our mentors. So if there's anybody from the mentors that has questions, from the mentees that has questions, we can ask now before we go to the ones we already have. So mentees, it's time to ask questions if you have any. Hello. Okay, I'll just assume you don't have any questions besides the ones I have here. So, but I'll be directing the first questions to Mr. Kizzy. I think he just joined us, still in line with the presentations. So I'll be directing these questions to him. Oh. I think his network is fluctuating. So, okay, the first question is, what business models are best suited for Nigerian fintechs? So, Mr. George, I'll be directing the question to you, even though I believe you have answered it at some point.
I'm sorry, please come again. What business model? What? I think there's someone's hand up.
Oh yes. Okay. Let's take our question. Fatia,
Okay.
you can proceed with your question, please.
Okay, thank you very much, Ma. Good afternoon, everybody. My name is Fatia Aditola. And first of all, I would like to thank the mentors for today's session. I have learned quite a lot, and I think some of my misconceptions have actually been corrected. So thank you very much for the session. So my question is that, we've talked about the business profit models and the business and profit models. So my major issue is regards the regulations, like where the law actually comes in. I am a law student, so I am very interested in the legal aspect. I want directions as to, what laws, how does a lawyer fit in this, this particular setting. Thank you very much.
Thank you so much. Mr. George, do you want to answer that?
Okay. How does a lawyer fit in this setting? I don't know if you're referring to the business models context or if you're referring to the overall fintech space. I mean, for those here, I'm a very big talker around, bringing these things down to you.
what I can say is that there's actually a session during the mentorship program that will address that. Like the whole session is about that question. So
Okay.
we might, if we leave that question for you, so I know that we can spend 2 hours on that.
Yeah, I'm very particular about at the end of the day, bring this thing down to how it makes sense for you. Yeah. Yeah. I mean, and it's good you guys have introduced that session, right? Because I mean, it would be nice for people to leave here without just knowledge, but plan for themselves on what they want to make this knowledge benefit them. Yeah. So sorry, back to your first question. I think it was on Nigerian. I don't know if you can repeat that again. Nigerian business model or something.
Okay. Yes. What business models are best suited for Nigerian fintechs?
What business model are best suited for Nigerian business? Well, you actually got it correctly. I think I've responded to that before. There's no right or wrong business model that is best suited for anybody. Is understanding you, right? What business model is best suited for you in the context of the things that you want to do, which is why, go back to what I said about the why and the how, more important than the what, right? What business model it is. It's not about the name of the business model. It's just about the fact that I can profitably bring out this product and people are taking it from me. It's like in the simplest, right, of terms, right? So if you look at today in the fintech space, so fintech is the word fintech, first of all, is gradually blurring out in the sense that a lot of non-traditional financial technology companies, from where the word fintech was derived, are now playing in the fintech space. So you might not call them fintechs, but I think was it Ibrahim or somebody mentioned the word embedded finance. But because of what embedded finance is doing, so you now have the guys that are traditionally non-fintechs, but playing in the payments, in the fintech space, in different ways. Even the regulators have joined in the queue. Everybody is now becoming a product-led company, right? I think it was last week I was saying that how NCC, the Nigerian what was the name of that? The Nigerian Communication Commission, or what they call them now, brings out the unification codes for all the networks so that everybody's using the same code to do different things. At the end of the day, those things are all products because you're paying for them. All right. As a regulator, I would have thought that it was going to be a toll-free code, right? So I want to do anything and I dial the code, it is toll-free. Only to find out I'm getting charged when I dial the code. So it's now a product rather than you bringing out in your mind, you're not unifying anything. You're opening a product line you're making money from. So everybody's gradually coming in one way or the other, selling or playing the fintech space, right? You have companies or hospitals now where you now go and you can buy electricity. You can now do other things apart from you're going to the hospital. You can now go to their website, you're buying electricity. Everybody's now selling value-added services. Almost everybody's selling airtime and data on their platform these days, right? So it's blurring out, gradually blurring out. So you might now start looking at more about not the company being a fintech, but what their activities are doing. So what is best for you is what fits whatever you want to achieve. So if your JIIPC, that is a mentorship program, that now decides that it wants to also have a leg in the fintech game by helping people process, for example, set up payments offshore, companies offshore, fintech set up company offshores, right? To process transactions that are off Nigeria, but there are companies in Nigeria. That can be a play that you gradually build out as a fintech play, even if you are JIIPC, doing mentorship, on the legal side of things, right? So what works basically for you is what you look at that can help you sell whatever it is you're selling and be profitable while doing that. That is what works for you. Whatever name you want to call it, you can even give it your own new name. Just call it whatever you want to call it. Thanks.
Thank you so much, sir. Mr. Ibrahim KG has joined us again, so I'll be directing the next question to him. Sir, are you with us? Can I address the next question to you?
Yes, please.
Okay, sir. Thank you so much. Apart from the banking and payment sector, what can be done to boost investment in other fintech sectors in Nigeria?
Apart from the banking and payment sector,
yes.
What can be done to boost investment in the fintech?
Yes.
Okay, so for me, so there are three key things to the continent we live in. Yeah, I think there's a higher chance that we have 60 to 65% of African predominantly working in the agro industry. Yeah, smallholder farmers, and about 80-85% of businesses in Africa are MSME. Yeah, that's micro and micro, small, and then medium enterprise. So typically, these two segments are the largest. Even though you find out that there are not many solutions that want to address some of these two industries specifically in the past, but I can say it boldly that there are investors today that are more than willing to listen to problems, stories that are revolving around MSME in Africa, and then the smallholder farmers. Yeah. Other than that is there's a lot of also global interest around women empowerment. Yeah. So anything that would any solution that would solve or that will be built around, say, maybe ESG or SDG as it were, that's those are definitely attractive today. Yeah, I can say that. So one can then say this segment of the SME is what I want to tackle, or maybe then smallholder farmer segment, or market women, and a lot of other segments within. But otherwise, yes, there are a lot of I would say pass. What I mean there is there are a lot of uninteresting display from investors or fund managers away from solutions that are just typical payment and banking. Yeah, but solutions that are supposed to address SME. For instance, major FX platforms in this part of the world are also just they've been solving a lot of issues for the enterprise and the medium, enterprise organizations and larger corporate organizations. SMEs are still struggling to get up with that. If you check typical Alaba, yeah, in Lagos here, the folks there still have to do round tripping to settle in China every other time. They need to send more funds, they need to send Naira equivalent to someone locally here, instructed, while they get this other, liquidity partner in China to settle in the local currency for them, for the supplier on the goods they will be receiving here in Nigeria. Yeah, all those are still, of course, because the growth in those areas are a little bit slow. The work are harder and heavier. Yeah, you don't find it a little bit attractive. But if you ask me, fund managers are finding those long-term solutions a little much more attractive as it's solving real problems. So within fund and the VCs that are locally available and foreign, I think there are a lot of funds that are looking towards those. In the last maybe few months and maybe going into the future. Yeah.
Thank you so much, sir. I don't know if Ms. Mariam has one or two things to say. Maybe just take a minute to say her final words and then we'll close.
You mean to add to what Ibrahim had talked about?
Yes, if you want to address any of the questions or both of them, just.
Okay, I think I saw a question around if there are any laws regulating how much fintechs should make and what they should charge. I think there was a question like that you sent, so maybe I can address that.
Yes,
okay, so currently today, there are no laws regulating the profits that the fintech can make, right? Or a company in general. Companies can decide to or make profit or loss. Not every company makes profit, right? Sometimes they make losses depending on what their strategy is. Sometimes the strategy is to make a loss first, right? Maybe to introduce premium like we had earlier mentioned, and eventually starts to make profit. So a company, a business, a fintech can make as much revenue as they can generate. So there are no laws that guides that. But in terms of charges, I know that there are a few charges that, there's industry standard of what the maximum of what you can charge. So there's like a cap on some of the transactions, but, every provider has their own charges and what they set for their services in terms of what they would charge when fintechs, connect to this provider, either through APIs. So what some of them do is to mark up those fees to be able to earn a revenue. But more often than not, the fees that are charged are also driven by, competition. So a provider can decide to charge you a certain amount. You can either decide to mark it up or, still put that same amount in the market because you want to be competitive in the market and have some advantage over others. So you can either charge the same fees your competitors are charging based on what your provider is giving. Sometimes you're able to negotiate better fees based on maybe your transaction volume or count or how much money you've made. You can also decide, if they charge me, I would not charge my customers, to either go lower or not charge at all to attract more people on your platform, because maybe your end goal is to, acquire more customers than the revenue that you make. But aside the industry, maybe cap on some of the fees that you're allowed to charge in the market, there's no law per se that, I would say it's in place for some of the services of what you're allowed to charge. So that's what I would like to round off with. And I would like to say once more, thank you to JIIPC for, the opportunity to always be part of this sessions. It's also eye-opening for me because I get to learn from the mentors as well. I've learned a few things today as well that's added to my wealth of knowledge. And for the mentees, continue to be part of this. Continue to research more. You can reach out to me on LinkedIn. Also start to build your network base. So thank you once again, JIIPC, for this opportunity, and thank you to the mentors as well for adding value.
Thank you so much, Ms. Mariam. It's always a pleasure having you with us. So I would like to I would like to say thank you to our mentors for taking time out of their very busy weekend to be here with us. Thank you so much for that. And thank you so much. I'm sure our mentees have learned a lot from you. We can't thank you enough. And our mentees, just try to take advantage of our one-on-one mentorship, 30 minutes with your favorite mentor. You can always reach out to us or them. They're always there to answer your questions if you have any. Thank you so much, everyone, for joining us today. It's been a wonderful session. And I wish everyone a lovely weekend.
Thank you. Bye, everyone.
Bye.
Bye, everybody.
Bye. Bye, guys. Bye, everyone. Enjoy your weekend.